The most trustless name in news.
Once you get past the initial hurdle of understanding the basics of crypto, blockchain, and DeFi, making money in these markets become easy. Why? Well, there's a simple strategy everyone should deploy. Copy what people are doing, people that are smarter than you and who have been involved in the crypto markets longer. That is exactly what I've been doing, and today I'm gonna show you what moves this person has been making, as well as moves I've made. So are you ready for it? Because it's time for Chico Crypto. Now, I don't consider myself a genius in crypto, but I have been in the market since 2013, and I feel like I have a pretty good grasp on them. And lately, I've been trading based on a signal I patented. This is the GMX long versus short ratio indicator, and it has been treating me real nice.
Very nice.
So, what is this indicator? Well, August 30th, I tweeted, "My GMX indicator is flashing." GMX is a DEX used majority by retail traders. Majority of retail are going long, 90 million long versus 11 million short. Centralized manipulators like to wipe out retail. Do the opposite of retail, which is exactly what I did, and I made some good money doing this. Let me explain this further with what happened over the past week. Pulling out the Bitcoin price chart, we can see from August 18th to the 28th, the markets were boring, going sideways. Well, August 29th, boom, the markets pumped from 26K to 28K, nearly an 8% pump. How much money was made liquidating Bitcoin shorters? Well, as we can see from this liquidation chart, 37 million in shorts were wiped out from this pump. Now, here comes August 30th, the day I put in my short. As we can see, the plug was pulled. Bitcoin crashed from 27,500 down to a low of 26K by the 31st, a 5.5% decrease. How much money was made from liquidating the Bitcoin longers? Well, August 30th, 38 million in longs wiped out, and the 31st, 22 million cleared. 60 million in longs were liquidated with just a 5.5% crash. Basically double of what was liquidated on August 29th when they wiped out the shorts, and that had nearly an 8% pump. Now, the goal of market manipulators consists of two things. Wipe out the shorts, number one, or longs, but number two, get retail bullish or bearish by executing large pumps or dumps. Now, when retail gets bullish, it gets them to set up longs, which is exactly what happened. From Binance open interest for perpetuals, we can see this jumped from 6.5 billion to over 7.1 billion by August 29th, aka 600 million in new perpetual trades hit the markets. Much of this retail, although a large majority of this was the manipulators putting in dummy, aka fake longs, to trick those who analyze the data to believe the markets were really turning bullish. By August 31st, open interest crashed from 7.1 billion to 6.2 billion. Now remember, only 60 million was wiped out from liquidations. Where did all this open interest go if it didn't get liquidated? Well, the market manipulators put in dummy trades. In this situation, dummy longs, aka fake longs, to trick the people who analyze the data to thinking the markets were bullish. They put in these fake trades, and before the plug was pulled and the markets crashed, they closed these trades, which is why open interest crashed by so much. It wasn't due to liquidations, it was due to fake trades on Binance being closed out. And this is where the GMX indicator comes in. These market makers aren't on GMX putting in dummy positions. GMX is a decentralized exchange where retail traders trade. All the trades are fully public since the trades are on the blockchain. Thus, the open interest, long versus short, is real. And the ratio between the two is likely how the ratio on centralized exchanges is if you took out the market makers. That is why I put in my short August 30th. Because if we go back to that tweet of mine, we can see open interest was 104 million. Almost 93 million of that was long trades, and only 11 million of it was short trades. Thus, a similar ratio of long versus short was happening on the centralized exchanges. I knew the derivative rug was going to be pulled soon because of this. So how to use this indicator? Well, number one, total open interest on GMX needs to be above 100 million. Why? Well, if the centralized manipulators are going to make a big move, there needs to be money made and a good amount of it. Whenever 100 million or above open interest is on GMX, we know on the other exchanges there are even more retail traders with trades open. Millions, hundreds of millions more. The second requirement is when total open interest on GMX breaches 85% for either long or short. Now, if these two requirements are met, I put in my trade, long or short, doing the opposite of retail. Checking out the GMX dashboard right now, open interest isn't above 100 million, so requirement number one isn't met. Also, total open interest is nearly 74.7 million. Long positions are 58.4 million, which means about 78% of open interest is long. Requirement number two isn't met. So I'm not going to be making a move today, although I'm keeping my eye on this. The open interest ratio is getting close to 85%. I've been in the markets for a bit, and if you think I'm smarter than you in crypto, then copying this indicator and adapting it to your trading strategy wouldn't be a bad idea. But who is smarter than me, and what am I copying from them? Well, if you didn't know, Arthur Hayes is the godfather of crypto derivatives. He co-founded the first crypto derivative exchange, BitMEX, in 2014. With this, it was the first time in history Bitcoin and other crypto assets could be traded with leverage up to 100x. BitMEX dominated the perpetual markets all the way up to mid-2019. As we can see from this mid-2019 tweet, BitMEX was doing over 10 billion in 24-hour volume, which is damn impressive for being in the middle of that bear market. As we can see from derivative volumes today, BitMEX would rank number 2 with that type of volume, just behind Binance. Arthur is no longer the CEO of BitMEX, but he is a large shareholder. But he obviously knows derivatives, and following what he does in the derivative space wouldn't be a bad idea. So what is old Crypto Hayes doing? Well, Arthur is going big into GMX. Hayes first mentioned GMX in June of 2022 in a blog post titled Floaters. He covered derivative DEXs in the crypto space and said, as we know, derivative trading volumes should be orders of magnitude higher than spot volumes. Whichever few DEXs comprise a natural monopoly will earn beaucoup fees. That is the future bull case for the category itself. And from what I've seen so far, GMX is the best out there. He then mentioned GMX again later in the year, December of 2022, actually telling people that he holds it in his portfolio. Arthur said, I have a few superpowered assets, such as GMX and looks in my portfolio. This is not the essay where I go into why I will be opportunistically selling my T-bills and purchasing these during the upcoming months of the hopefully sideways bear market. Back then, he saw GMX as superpowered. Well, 2 months later, in February 2023, Arthur spoke on GMX again in an interview with The Defiant. He said this to the crypto news outlet. Clients always pay for leverage. That's why when I set out to create my own crypto trading platform in 2014, I focused on derivatives. And it's also why when I started exploring how to get meaningful exposure to DeFi in 2022, I went the derivatives route then too. I have a large stake in BitMEX, and I also want to have exposure to what I believe will be a leading DeFi derivatives trading platform. And that platform is GMX. But Arthur continued, GMX is the second largest DeFi derivatives platform by trading volume. Most importantly, the tokenomics offer an attractive yield, which is another reason why I like this token for my portfolio. Now, because of his investments in 2022 and into 2023, he became the largest individual holder of GMX with over 200,000 tokens. So, since GMX has been having a correction this year, going from a peak of nearly $90 down to $32 today, has Arthur been selling and dumping? Nope, he hasn't sold a single one. He has been adding to his position, buying while the weak hands have been selling. Here is Arthur's public Ethereum address. As we can see now, Arthur has over 477,000 staked GMX. He has over doubled his position. And he has been recently buying at these low prices. 2 days ago, he bought and staked over 6,800 GMX. And nearly 90 days ago, in 2 transactions, he bought and staked over 2,300 GMX. Well, viewers, when the godfather of crypto derivatives exclaims GMX will be the leading DeFi derivatives platform and doubles his position in under a year, I listen. Arthur is smarter than me in the derivatives game, even though I first bought GMX before him. Maybe I'm smarter than Crypto Haze. Cheers, viewers. I'll see you next time.
The most trustless name in news.